Powers and duties of auditor. Powers and duties of auditor. We know that auditor can be of government company and non-government company. In non-government company, we are explaining the powers of C and AG. Okay, C and AG. We know that auditor of a government company is appointed by the C and AG. Okay, so section 140 subsection 5 is providing the powers of C and AG to give directions to the auditor. That is, we know that as per section 139, it can be either what 7 or 113 subsection 5, where C and AG is making the appointment of first auditor and as well as subsequent auditor. First auditor within a period of 30 days from the date of incorporation, 60 days to the C and AG, and subsequent auditor shall be appointed within a period of 180 days from the date of commencement of financial year. So the auditor who has been appointed by the power of appointment is also with the C and AG, and the auditor to whom C and AG has appointed, they also have the power to give what directions, what are the matters that is to be considered, which are the important area and which are the difficult area. C and AG shall give directions to the auditor. Then C and AG may conduct supplementary audit. What is meant by this supplementary audit? Supplementary audit. Audit report received within a period of 60 days, C and AG may pass an order to conduct supplementary audit, and they may comment upon that audit report, and they may also supply the audit report. Okay. Then test audit. C and AG may also give directions to conduct test audit or order to pass what test audit. So these are the powers which has been given to the C and AG, give directions, supplementary audit and test audit. Then powers of auditor. These are the powers of whom? Auditor. Auditors is having the following powers. Read it and I will explain it. Okay. First, books of accounts, vouchers. Auditor of a company have the right to access books of accounts and vouchers. Auditor may inspect the books of accounts. Auditor may have unlimited access to the books of accounts. Then auditor have the right to visit branches. Suppose ABC Limited having some branch which is situated in Chennai, auditor have to obtain, or auditor is required to express an opinion on the financial statement, but auditor is not in a position to obtain what information from the branch. In that case, auditor may visit the branch. Auditor may also have the access to audit report of the branch if it has been audited by some other auditor. Then auditor have the right to obtain information and explanation from the company, and it is the responsibility of all the officers and employees of the company to provide all the assistance to the auditor, information and explanation. Right to visit branch. Right to receive remuneration. We have already discussed as per section 142. Remuneration. In case first auditor, it may be fixed by the board of director. For subsequent auditor, members at the annual general meeting may fix or prescribe the manner in which the remuneration to be paid. Then notice of meeting. Section 140 subsection 8 provides that auditor of a company has the right to receive notice of meeting, and auditor shall attend the meeting unless he is exempted, and such an attendance can be either through proxy or in person. So he has the right to receive notice and as well as attend the meeting. Okay. Sign the audit report. We know that we have to sign the audit report. This is also what our right. So right to access the books of account, vouchers, right to visit the branches, right to obtain information and explanation, right to receive remuneration, right to receive notice of the meeting, and right to sign the audit report. So these are the rights of whom? Auditor. Now we have to determine duties of whom? Auditor. Okay, we are moving towards that. So these are the duties. These sections are covered, the duties of an auditor. 143 subsection 1, subsection 2, subsection 3, subsection 4, 9 and 10, 5, 6, 7 we know C and AG power. 11 and 12. These are the duties of an auditor. Section 143 1 state that what is the duty of auditor as per 143 subsection 1? Duty to inquire. That is, inquiry have to be conducted by the auditor. We will explain it detailedly. Then 2, as per 2, true and fairness. Do auditor have to report with respect of the true and fairness of the audit report. 3, duty to state in audit report. 4, reasons for qualification. Auditor have to state the reasons for qualification. 9 and 10 states that auditor have to comply with the standards on auditing. SA, AS, etc. Auditor have to comply with SA and AS. 11. CARO. Auditor have to comply with company audit report. Okay. CARO 2016. Auditor have to comply with the same. 12. Duty to report what? Fraud. So 143 subsection 1, inquiry have to be conducted. True auditor have to report with respect of the true and fair view of the state of affairs. Then state in audit report, auditor have to state in audit report. Auditor have to state the reasons for qualification. Auditor have to while conducting the audit, auditor have to comply with SAS, comply with CARO, and auditor, if identifies any fraud, he have to make the report of the same. So this is what section 143. We are going to explain. They have two sections which are very important, 143 subsection 1 and 143 subsection 3 and 143 subsection 12. These are important and that required what? More explanation. So first of all we are moving towards 143 subsection 1. So here we are explaining section 143 subsection 1 duty. Auditor have the duty to inquiry. What are the matters that is to be inquired by the auditor? First one is that whether loans and advances made by the company on the basis of security is properly secured or not, and whether the terms and conditions is prejudicial to the interest of company. That is, if the company has obtained any loans and advances, we have to determine whether such loans and advances has been made by the company on the basis of any security. That is, whether such loan is properly secured or not as per the books of accounts, and determine whether it is actually secured, whether merely it is an entry or whether it is actually secured, and determine the terms and conditions on the basis of which such loan has been obtained, and determine whether that terms and condition is prejudicial to the interest of the company or not. Did you get it? First of all, it has been stated that loans and advances, whether company has made any loans and advances on the basis of any security. If it is, and determine whether it is properly secured or not, and whether the terms and conditions on the basis of which the loan is obtained is prejudicial to the interest of company. That is, it is mainly about secured loan. Determine whether the company has obtained any secured loan. If it is showing that it is a secured loan, determine whether it is secured or not, and terms and conditions of such loan, and determine whether the terms and condition is prejudicial to the interest of company. This is what 143 subsection 1 clause A. Okay. Now we are moving towards clause B, which is stating that transactions, whether any transactions of the company which has been shown merely by book entries, whether it is prejudicial to the interest of the company or not. That is, any transactions which are merely represented by book entry is prejudicial to the interest of the company. This is what clause B. Then clause C. We know that they may have many companies which may not be investment company or banking company, and the securities or the asset of such company comprises what? Debenture, share, any other securities, etc. So auditor have to determine whether the company is making the sale of such security at a price which is less than the cost. But the same is, the clause C is not applicable to investment company or banking company. That is, it is not applicable to investment company and as well as banking company. It is stated that company not being, it means other than, company not being investment company or banking company, of which asset comprises shares, security or any other debenture, and whether the company is selling the asset, that is security, debenture and shares, at a price which is less than the cost. Suppose they acquired the asset at a price of 10 shares at a price of 100, 10 into 100, but they are selling it as at a price 10 into what? 80. So it is what? So auditor have to determine whether any transaction is existing in that company or not. Then clause D, whether loans and advances made by the company is shown as deposit. That is, loans and advances has been made by the company, but they are showing it as what? Deposit. Whether any company is doing so, it is also required to be inquired by the auditor. Then whether director may have some personal expense, or director may obtain loan to purchase a car, but the loans has been charged to the books of accounts, and the interest has been charged from the profit and loss account. So here what is happening? Personal expense of Mr. Director is charging to our profit and loss account, which may not give a true and fair view of the state of affairs of the company, which may not give true position of the company and true result of the company. That is, it is affecting the balance sheet and as well as what? Profit and loss account. So it is stated that whether any personal expenses charged to revenue account. I have already given example. So auditors also have to determine whether any personal expense has been shown in the books of accounts or whether it has been charged to the revenue account. The last one, we know that company may make the allotment of shares. Allotment can be on the basis of cash. So if the books of accounts of the company is showing that any shares has been allotted for cash, auditor shall determine whether the cash is actually received or not received. That is, if the auditor identified that cash is actually received, no problem. Suppose, but cash is actually not received. So auditor is required to determine whether it is unfairly affecting or whether it is affecting the books of accounts. On the basis of books of accounts, we have prepared ledger, balance sheet, P&L, etc. Okay. So first of all, auditor has to determine whether the company has allotted any share for cash, whether the cash is actually received. If not received, whether it is affecting the books of accounts. So this is the duty as per 143 subsection 1, which is stating that auditor shall inquire into the following matters. First of all, we have discussed that whether loans and advances made by the company has on the basis of any securities properly secured or not, and whether the terms and conditions on the basis of such loan is affecting or prejudicially affecting the company, interest of the company. Then B, clause B, whether any transactions merely represented by book entry is unfairly affecting or prejudicially affecting the interest of the company. Then C, clause C, this is about whether a company, not being investment company or banking company of its asset comprises shares, security, debentures, is selling such securities at a price which is less than the cost of acquisition. Then clause D, whether loans and advances made by the company has shown as deposit. Then clause E, whether any personal expenses has been charged to the revenue account. Then last one, clause F, whether books of accounts of the company is showing that the shares has been allotted for cash, whether cash is actually received. If not received, whether it is affecting the books of accounts. So this is 143 subsection 1 duties, right to inquiry. Now we are moving towards 143 subsection 2. There is nothing auditor have to state with respect of the true and fair view of the state of affairs. Then third one is that auditor have to state in audit report. So what are the matters on the basis of which or which are the matters which has to be indicated or which has to be stated by the auditor in audit report. We are going to check the same. Okay, DS. So here we are explaining section 143 subsection 3, auditor shall state in audit report. Actually they have A, B, C, D, E, F, G, H, I, J, 10 clauses, but here that is this board comprises only what? F clause. We will discuss the remaining soon. Okay, so because the space is not enough so as to cover all that clauses, I need some explanation. That's why I just given some space while writing. So first of all, we will explain this A to F clause and then G to I clause. Okay, so first of all, auditor shall state in audit report the following. Which are the matters that is to be stated by the auditor in the audit report? First of all, whether auditor have received information and explanation relevant to the audit. Received or not received. Auditor may receive that information and explanation or not received. If it is not received, auditor or received, auditor is required to state in the audit report whether information and explanation as relevant to the audit has been received or not received. Then we know that to some organization, to some companies, they are required to maintain some books of accounts as per the requirements of our laws and regulation. It may be as per RBI guidelines, SEBI guidelines, our Companies Act also, or some other rules and regulation for the time being in force. So auditor have to determine whether such books of accounts has been maintained, whether books of accounts required by law and regulation has been maintained by the company or not. If it is not maintained, they have to state. If it is maintained, they have to state. That is, the company has maintained all the relevant books of accounts as per the requirements of laws and regulations, or the company has not maintained the books of accounts which has been required by our law and regulation. Then suppose ABC company having located in Bangalore, having a branch at Chennai. auditor, and the audit of the Chennai branch was not conducted by the same auditor. So he have to obtain what? Report on accounts of the branch. So auditor have to state whether the auditor has received report on accounts of the branch. It has to be received for the purpose of expressing an opinion with respect of the principal office. So auditor should indicate whether he has received the report on accounts of the branch or not. Then we know that we have to know that the financial statement is based on what? Our books of accounts, journal, ledger, trial balance, P&L, and P&L and balance sheets are based on what? These books of accounts. So we have to determine whether the financial statements are in agreement with the books of accounts, whether it has been prepared in agreement with the books of accounts. So auditor shall state whether the financial statements are prepared in agreement with the books of accounts or not. Then financial statements should be prepared as per the accounting standard, which has been prescribed as per section 133 of the Companies Act 2013. I'm just confused in between Companies Amendment Act 2017 and what? Companies Act 2013. Don't worry, okay. So it has been stated that financial statements has been prepared by the company in compliance with or by following accounting standards or not. This is also the responsibility of an auditor to state the same. Then auditor have to express some views and comments which may have what? Adverse effect on the functioning of company. That is views and comments of an auditor which may or may not have what? Adverse effect on the functioning of company. Suppose, that is, it may or may not related to financial aspects. Jewelry. This is a jewelry, a company of jewelry, just like Kalyan, Malabar, and what? One famous which is situated in North, Tushar. Sorry, I am not remembering the same. Tashkar. Some name like this. I don't remember the same. So they have a security who is always in sleeping mode. Night. Not in morning, but in night time he is in always sleeping mode. Auditor identified the same. Auditor has said that the security that you have appointed is a sleeping security. No need of appointing such a person. It may affect in your internal control system. There may chances of happening some financials or robbery, etc. So this is also what? An example which may affect the functioning of the company. So auditor may have some views and comments which may or may not relate to the financial aspect, that is having what? Adverse effect on the functioning of the company. So auditor have to state whether he is having such any comments or whether he has identified some matters which is having what? Adverse effect on the functioning of company. So this is what? A to F clause. Clause A, information explanation has been properly received. Then books of accounts as per laws and regulation has been maintained. Whether books of reports on the branch has been received. Financial statements are in agreement with the books of accounts. Then financial statement has prepared as per section 133. Then views and comments which is having adverse effect on the functioning of the company. Now we are moving towards clause G. Okay. Then 143G. As per our Companies Act section 164, this is explaining some disqualifications of a person and who cannot be appointed as a director. Then auditor have to determine whether any person has been appointed as director in contravention of section 164. In law we are going to discuss the same, but this is our audit, only company audit, so I am not going that much in section 164. They have many things which has been provided with respect of the disqualification of director, disqualification of a person to be appointed with disqualification on appointment of director. So auditor have to determine whether any person has been appointed as a director of a company in contravention of section 164 of the Companies Act 2013. Then views, qualifications and adverse remarks of auditor with respect of the maintenance of books of accounts. Whether books of accounts has been maintained properly at the registered office, whether there exists any misstatements in the maintenance of misstatement in books of accounts. Then whether auditor is having any special views or any qualification adverse remarks with respect of the maintenance of books of accounts, whether reports from the branch or periodic returns from the branch is received or not, whether the books of accounts has been maintained electronically, whether it has been disposed without the permission of any laws and regulation. We know that electronic maintenance of books of accounts, e-maintenance, we have to study the same. Section 128 is providing with the respect of these matters. Okay. Then internal financial control system. Auditor have to explain his comments. Then auditor of a company is required to determine or shall state in auditor's report whether internal financial control system of a company is operating efficiently and effectively. Auditor have to state in audit report whether the internal financial control system is operating efficiently and effectively. But this internal financial control system is not applicable to some categories of company. That is, they have such categories of company that is not required to maintain the internal financial control system. So which are that categories of company? One person company, OPC, small company, dormant company, then private company having a turnover less than 50 crore, loans and borrowings less than 25 crore. That is, normally if a person has been appointed as an auditor of a company that is required to maintain internal financial control system, auditor have to state in audit report whether the internal financial control system is operating efficiently and effectively, and this internal financial control system is not required to be maintained by such categories of company which are one person company, small company, dormant company, private company having a turnover less than 50 crore and what, loans and borrowings less than 25 crore. Then last clause J, auditor have to state his observation with respect to the pending litigation, whether the company is having any pending litigation, whether appropriate provision has been made, then expense on account of this pending litigation, etc. So auditor have to express his views or his comments with respect to the pending litigation, and whether the company is making transfer to the investment education protection fund. 125 fund means investment education and protection fund. Auditor is making appropriate transfer to investment education and protection fund, whether there exists any delay in making such a transfer. So now we have discussed auditor's responsibility with respect of auditor shall state in audit report from A clause to I clause. I hope you have understand with respect of the same auditor's duty as per section 143 subsection 3. First one was what? A clause. I am not describing it in the same order. Books of accounts from the whether information and explanation has been obtained, whether books of accounts as per the laws and regulation has been maintained, whether report on accounts of the branch has been received, then what, whether the books of financial statements are as per in agreement with the books of accounts, whether financial statements are as per standards on audit, not standards on auditing, accounting standards. Then auditor's views, comments, observation with respect of having adverse remarks or adverse effect on the functioning of internal control system or functioning of the company. Then auditor have to determine whether any person who is not qualified to be appointed as a director has been appointed by the company. Qualifications, adverse remarks with respect of the maintenance of books of accounts. Then operation of internal financial control system, whether it is operating efficiently and effectively. Then last one was whether the company having any pending litigation and whether transfer to IEPF is taking in the correct time or not. So these are what the duties of an auditor as per section 143 subsection 3. 143 subsection 1 we have already discussed, right, duty to inquire. 143 subsection 2 duty to state true and fair view of the audit of the financial statements in audit report. 3 duty to state in audit report. 4 what, duty to state the reasons for such qualification. 5, 6, 7 rights of what, rights of comptroller and auditor general. 9 and 10 whether the company is auditors is also responsible to conduct the audit as per the SAS and AS. Then auditor have to determine whether as per section 149 subsection 11 whether the financial statements are prepared as per the CARO. They have to be determined by the auditor. Then the last one is that auditor's right or auditor's duty to report on fraud. Now we are going to discuss 143 subsection 12. Okay. So here we are explaining the stage, that is duty to fraud as per section 143 subsection 12. Okay, 143 subsection 12. 143 subsection 12. This is an important section and subsection, you have to remember it at any cost. Duty to report fraud. What? Duty to report fraud. In this case, we are explaining the stage where the fraud amount is more than 1 crore, more than 1 crore. In that case, auditor have to provide that report. That is, auditor is identifying during the professional course that a fraud has been committed against the company by the officers or by the employees. So, if auditor identifies that any officers or employees has committed a fraud against the company, that is, auditor has a reasons to believe that an offence involving fraud has been committed against the company by the officers and employees, auditor shall forward a copy of such report to the board of directors immediately. It can be forwarded to the board of directors. In some company, they have board of directors and as well as what, audit committee under section 177. So they have to forward the copy of report to the board of directors and audit committee as the case may be. For what they are forwarding that report? So as to obtain their report, their reply and their recommendations, their observations, etc. So it is the responsibility of the board of directors and audit committee of the company. If they received any report from the auditor of a company stating a fraud where the fraud amount is more than 1 crore, they have to reply to the auditor within a period of 45 days. That is, they have to provide their recommendation, their observation within a period of 45 days. Suppose, if the auditor has received such a reply, if it has been received by the auditor, they have to forward that reply plus report plus their comments to the central government within a period of 15 days from the date of receipt of that reply. Suppose if they have not received such a reply, they have to forward report along with their comments to the central government. That it has to be immediately reported to the central government. So they have two stages, 143 subsection 12, which has been stated that where auditor of a company during the course of his professional duty has a reasons to believe that an offence involving fraud has been committed against the company by the officers and employees, auditor shall forward a report immediately stating the nature of fraud, parties involved to the board of directors or audit committee as the case may be for seeking their reply or observation within a period of 45 days. If reply or recommendation or observation has received by the auditor, auditor shall forward report which has been submitted report along with the reply or recommendations of the board of directors and their comments to the central government within a period of 15 days of receipt of such reply or recommendation in form ADT4, in form ADT4, fraud form 4, fraud form 4, okay, fraud form 4. So it has been stated that where the fraud amount is more than 1 crore, they have to report to the central government. If reply received within a period of 15 days, if no reply received from the board of directors, they have to make the immediate reporting. Here we discussed what, fraud amount more than 1 crore. Now we have to discuss the case where the fraud amount is less than 1 crore, okay. So this is the second case where the fraud amount is less than 1 crore. If auditor during his professional duty identify an offence involving fraud which has been committed against the company by the officers or by the employees, where the fraud amount is less than 1 crore, they have to report to the board of directors within a period of 2 days of discovery of fraud. That is, they have identified the fraud in this day, within a period of 2 days they have to report to the board of directors. It is applicable in a case where the fraud amount is less than 1 crore and they have to provide the following in that report: nature of fraud, that is which type of fraud is involved, approximate amount, we know that the amount is less than 1 crore, so what is the approximate amount of that fraud, this is also has to be included. Then parties involved in that fraud, it can be the officers or employees, so who are that employees or officers involving in that fraud. So these are the disclosures, or this has to be disclosed in the report by the auditors which has been submitted to the board of directors within a period of 2 days. It has been stated that where the auditor during his professional duty has a reasons to believe that an offence involving fraud has been committed against the company by the officer or by the employees, they have, and where the fraud amount is less than 1 crore, they have to report to the board of directors within a period of 2 days. Then nature of fraud, approximate amount and parties. Then this report has been submitted by the auditor to the company. Then company in their board report compulsorily disclose some matters with respect of this fraud. Which are the matters? Nature of fraud, approximate amount involved in the fraud, parties. Suppose if the company has taken remedial action remedial action taken or not taken. In case of taken, then in case if the remedial action is taken, then it is not required to provide a disclosure with respect of the parties involved in the fraud. But if no remedial action taken, they have to disclose the parties who are involved in the fraud. So here we are successfully completed our 143. Here we discuss 143 subsection 12, which is mainly about auditor's duty with respect of report to fraud. Fraud amount can be more than 1 crore, less than 1 crore. More than 1 crore, report to BOD and report to central government. Board of directors on receipt of such a report by the auditor have to reply within a period of 45 days. If reply received within a period of 15 days, they have to report to the central government. But if no reply received, they have to immediately report to the central government in ADT 4. Then where the fraud amount is less than 1 crore, the auditor of the company shall file a report to the board of directors. Nature of fraud, approximate amount of fraud, parties involved in that fraud, they have to be disclosed. Then board of directors of the company, that is company is also bound to disclose some matters in the board report. Nature of fraud, approximate amount of fraud, parties involved. If the remedial action is taken, it is not required to disclose with respect of the parties involved. If no remedial action is taken, it is required to disclose with respect of the parties involved. So here we are completed our section 143. I hope you enjoyed the classes. Study very well. Okay, it is not required to remember the clauses, but if you are able to remember, it is very good. Okay, so now we are moving towards the next section, which is mainly section 128, maintenance of books of account. We will discuss the same in the next class. Enjoy your study. All the best.